Alright, what's up guys? This is Taylor with a quick update for Thursday, October 6th. Hope you're all having a good week so far, and, look to finish strong tomorrow. Don't forget the golden rule on Friday. Never lose your ass on a Friday. Protect your cheeks. So we'll jump in here, guys. The agenda for tonight. We'll look at the pieces of the puzzle, which we've covered over the last few weeks, the dollar, HYG, and the volatility index. We'll take a look at Apple, Tesla, and Amazon. I think three very important names right now. We'll take a look at a few key SPX levels for tomorrow's session. And then the biggest question is, where the hell are the buy signals? Because we don't have any just yet. Then I want to take a quick look at energy and a couple of energy stocks, because I think that might be one spot in the market you might be able to get long. So we shall jump in. But on our end, it's been a pretty good week. We took profits on a short in Tesla. We did take a loss on a short position in Snowflake. Good exit on our behalf. We have a November expiration short on Apple. Got some call credit spreads up here at 150. And then as of today, we got long LNG, which is an energy stock. But we'll jump in. So as far as the pieces of the puzzle, remember, we're basically playing the over-under game. Are they above or below that daily 21 EMA? So for the volatility index, still a problem here for the bulls. As long as you have the VIX above that daily 21, printing not only a daily buy signal, but a 4-hour buy signal, and not only a 4-hour buy signal, but a 4-hour buy signal in a 4-hour squeeze, structure is still pretty bullish there. And of course, if the bullish structure takes the VIX back towards 34, 35, very likely down goes the market. So for now, I think the VIX is still working in the favor of the bears. And then for the dollar here, pretty big rip today. So the dollar is still above that daily 21 with daily and 4-hour buy signals. Still a problem for the market. Still one of the strongest trends out there. So if from here the dollar rips back towards 114, 115, very likely to see the market continue to trade right on back towards the downside. And then lastly here, HYG. Pretty good pop, so you guys can see the correlation. The dollar pulls back for a few days, HYG rallies for a few days. You did get a pretty good pop there in the market. But as far as the structure, nothing changes just yet. VIX is above that 21, the dollar's above that 21, and old HYG sack here, still under that daily 21 EMA with a daily sell signal. As long as that's the case, HYG, despite the nice pop here, the structure still works in the favor of the bears. So not too many changes. These short squeezes, which of course that's what your 200-point rally off the bottom was. These short squeezes are fast, they're furious, and of course if you're caught short in the wrong fashion, they can be pretty freaking uncomfortable. But the biggest question is, does this short squeeze actually change the structure in a meaningful fashion? Which we are going to talk about next. But then as far as a few of your most important stocks, and when I say most important, they're heavily weighted. They got some meat on them bones. We'll start off here taking a look at Apple, which I mentioned we're short in my mastery for November. Speaking of the mastery, link in the description for the $7 30-day trial. We trade twice per week, not twice per leak. We trade twice per week together. We give you the trade alerts, all kinds of good stuff. So check that out. But as far as Apple here, under 150, still a big problem for the bulls. Right? Apple is the most heavily weighted stock in your QQQ, your XLKs, your S&Ps. Under 150, I think the door is wide open here for a move back down towards those June lows. That's going to put a lot of pressure on your S&Ps and your QQQ. Now notice here, guys, the 21 EMA actually starts to cross under that key level of 150. That's a problem for the bulls, because now at this point, you could actually see that full reversion to the mean bounce for Apple, but we're under that key level of 150. So we're short that, I want to be short Apple all the way up to like the daily 50 SMA. So we're comfy there for now, but under 150, door is wide open for a bigger flush. A bigger flush in Apple, no bueno for your market. And the same thing goes here for Tesla. Under 265. Mind you, we got earnings coming up in a few weeks here. But regardless, under 265, technically the door is wide open for a flush back down towards 206. Gonna drag your S&Ps and your QQQ and everything else right along with it back towards the downside. So the bulls have got some work here. The problems continue for Tesla. You take out your key level, you've got nothing as far as like legitimate support until you're back down here in the 200s. And now we have sell signals on the 4-hour, 2-hour, and the 1-hour. In other words, you take out key daily support, and now your 4-hour, 2-hour, and your 1-hour charts are in downtrends. What does it mean for an hourly chart to be in a downtrend? It means we're going to flush, rally back towards that 21, and then continue to flush from there. So under 265, I think Tesla's are short. Just be a little bit mindful of earnings coming up. Then you got Amazon here, and it's all kind of a bit of the same. Under 125-ish. Structure leaves a little bit to be desired. So nothing new as far as that goes. And then moving on here to the S&Ps. It has been an interesting week. We get that massive short squeeze off the bottom, but as far as from like a swing trading approach, we haven't fixed any of the bigger problems. So where the progress has been made this week is on the lower time frames. From one point of view, we cancel out all those sell signals. So down here at the lows, the 5-minute, the 15, the 30-minute, like basically every time frame has a sell signal on the big 3 indicator. What you've seen this week is basically we reached a point of exhaustion. The bears basically ran out of gas, and your 5-minute, your 15-minute, all the way up to the 4-hour, they transition from bearish to neutral. Bearish to neutral can make for a pretty good rip, but now if we're going to take the market higher, we got to transition from neutral to bullish. We got to get some buy signals here, my friends. So, as far as the structure goes, I'm not comfortable buying calls on the S&Ps or, loading the boat on a bunch of bullish trades until and unless the S&Ps and the QQQ can close back above that daily 21 EMA with buy signals on the lower time frames. Right now we're neutral. It ain't enough. So at a minimum, if we study the move in the S&Ps back here in early September, pretty mean push. It crapped out right away, but regardless, pretty good push. Throughout the course of that rally, on the big 3 indicator, you have buy signals on the 5-minute and the 15-minute chart. Right now, we don't have either. And we're still under that daily 21. Back there in August, when you got a mean mofo of a short squeeze, we had buy signals on the 5-minute, 15, 30-minute, and the 1-hour chart. So the beauty of the indicator is it's kind of that simple. If we can't even get a buy signal on a 5-minute or a 15-minute chart, we're not going to see some explosive rally like you had back there in August. Never mind a good 4 days of continuation like you had back there in early September. Now you got some big economic reports tomorrow. I think you got the jobless claims, all kinds of good stuff like that. So heading into tomorrow, play that over-under game. Right? Your key level for the S&Ps for tomorrow is the daily 21 EMA. If we go into the weekend and we're still under that falling 21, there haven't been enough improvements here to the daily structure, in my opinion at least, to justify buying a crap load of calls and staying long over the weekend. If they can actually get the job done, I think in a week or so, that puts us in a much better position to put on short positions for November, December. A better prices with a better risk versus reward. So a little bit of hurry up and wait right now. I like the position we're in. If the market rolls over and pukes, we got some cash coming our way with our Apple short. If we rally for a little bit more, well, we'll put on more short positions. So we'll see what's up tomorrow, guys. But that's my biggest, I'm not going to call it a concern, because I'm not long the S&Ps or the QQQ. But if I was long the S&Ps or the Qs, that would be my biggest excuse me, my biggest concern. We still haven't gotten to close above that 21 EMA, and we can't even get a freaking 5-minute buy signal, right? That's really lame. 200-point rally. We can't even pick up and keep a 5-minute buy signal along the way. From a swing trading point of view, I can't quote-unquote trust this rally just yet. Now, the last thing on the agenda for tonight, right, we took a look at the pieces of the puzzle, which I think for now still work in the favor of the bears. We looked at the structure of Apple, Tesla, and Amazon. I think that all works in the structure, the favor of the bears. So we'll paint that all red. Bigger picture, S&P's under the 21, daily sell signal. Nothing bullish about that, and we don't have any buy signals. At least not yet. Now, as far as energy goes, that's where you got some green beans. So, quick look here at XLE, which obviously looks a hell of a lot better than basically the rest of the market. In comparison to the indices, in comparison to the ARC ETF or XLK, the semiconductors, this ain't too shabby. Back above the daily 21, back above the 50, a little bit more strength here. Okay, sorry about that. I thought I heard somebody in my kitchen, and I'm home alone, so down goes the musket. But like I was saying, XLE here, you're back above the 2 key moving averages, and a little bit more upside here. You should get that positive cross with the 21 EMA back above the 50. That's always a good sign. Under the surface, we got buy signals on the 30-minute and the 15-minute chart. So, all in all here, guys, not a bad structure. Do I think it's good enough to look for a move back towards the highs? Not yet. In the short term here, next couple of weeks, potentially a move back towards resistance around 85. I do think that could be in the cards. Keep in mind, you want to look for a good entry. So maybe at this point a dip towards the hourly 21. Maybe you nibble on that. I think a dip down towards your daily 21 certainly provides a better entry. But as far as the names here go, Chevron looks pretty similar. Big day here out of ExxonMobil. Really big day. We took our shot today in LNG. She's a beauty. Doesn't mean the trade works, but there's a lot of edge here. Daily squeeze or the rising histogram. Buy signals on the daily, the 30-minute, and the 15-minute. And we opened up a pretty good risk versus reward trade here. So we did a October expiration, put credit spread. Our exit is on a close under that daily 21. And we're looking for a push here towards 180. So I'll show you guys that here on the Analyze tab. LNG, make sure we got that down there. Yes, check this out. Into, say, next Friday, because the trade expires on the 21st. So into next Friday, if we can catch a move into our target of 180, on 10 contracts, you're up about $1,000. So you'll make about $100 per contract at 180. And then a move down under 165, you're going to lose about $60 per contract. So not quite a 1 to 2 risk versus reward, but close enough for government work. And that put credit spread, of course, gives you a little bit of flexibility. In a perfect world, we rally towards 180 tomorrow, and we head into the weekend with a nice profit. With the short puts at 165, we can afford a slow grind towards our target. We can afford for LNG to trade sideways for a little bit. We can even afford for LNG to trade a little bit lower. We need the puppy above 165. Pretty similar to our Apple short. Apple can trade sideways, it can roll over, it can rally. Come November expiration, we need it under 150. And we got a nice paycheck coming our way. So, there you have it, guys. For now, we have seen a pretty good short squeeze earlier in the week. We're still under that falling daily 21 EMA with a sell signal. So here's the thought process. Look at the inverse charts tonight. To look at an inverse chart, look at minus SPX, minus Tesla. When I look at the inverse chart of the S&Ps, we got a short-term little uptrend. We got a positive cross on the moving averages. And all we've done this week is come from being very overbought and pulled back to the rising 21 EMA. I would never get short here. I'd wait for confirmation. The trend of structure still points towards more upside. If I'm going to get short that kind of structure, we got to break down first. That means if I look at the current structure of the S&Ps, I can't get long yet. I got to wait for that break above that 21 EMA. So before I let you guys go here, quick analogy. The analogy I've been using in the options room and my mastery is kind of like my dog. Right? Whenever I take my dog for a walk, anytime I go to open a door, she doesn't wait for me to open the door. Like as soon as I go to reach for the handle, or as soon as I barely crack the door open like I am right here, she just shoves her face through the door. Right? She makes the assumption I'm going to open up this door and let her in. I love my dog, so I'm not going to bonk the door off of her nose. But the point being is, she doesn't wait for confirmation. Doesn't even know if I'm going to open the door. No idea what's on the other side. That's kind of like getting long for a swing trade right now. We don't actually know if we're going to get back above that key level of that 21 EMA. And we don't even know if we do, if we get any continuation to play from there. There's that temptation to be the first guy or girl to the party. And of course, if you can be the first guy or girl to the party, you might make a little bit more. But I think there's a lot being said for waiting for confirmation versus an assumption this move continues to the upside. Confirmation would come in the form of we're cranking out a couple of closes back above that daily 21. We get and keep some big three buy signals. Then the dollar, the VIX, the HYG, the pieces of the puzzle, they begin to fall into place. So big day potentially tomorrow, so we'll see what's in store. But that is all for tonight's video, guys. As always, I hope you find it helpful. If you haven't already, go on ahead and hit the subscribe and the like button. As always, link in the description for the Big 3 indicator and the Mastery group. And I look forward to talking to you guys on Sunday with the weekly watch list video. Have a good night, guys. Talk to you soon. Adios.